highlights Brent crude to average around $45 per B year-end. Platts Analytics' disciplined approach to supply required to balance market fundamentals. U.S. elections outcome, fresh wave of infections herald more uncertainty. Singapore, the oil industry is in the middle of a huge demand shock, thanks to the coronavirus pandemic, and it could be potentially thrown into further chaos as the risk of a fresh wave of infections and price volatility, among other factors, linger, industry experts said during the 36th Asia-Pacific Petroleum Virtual Conference, or APPEC 2020. Not registered? Receive daily email alerts, subscriber notes and personalize your experience. Register now. The world needs to be prepared to see the volatility we're going to have in the next 12 to 24 months, Giovanni Cirio, global head of research, Vital, said during a panel discussion at the event. We're used to an oil industry where the shock usually comes from the supply side, and therefore, we always think about the role of OPEC in terms of its response to a sudden shift in supply. Now we have an absolutely unprecedented shift and shock on the demand side, Cirio added. The biggest worry today is the fragility of the oil-producing countries as supply has outpaced demand, said Ed Morse, managing director and global head of commodities research at Citigroup. Still, he said that they were uncharacteristically bullish about the crude price outlook as inventories were being drawn down. According to Morse, Brent crude will likely average $48 per B in Q4 2020 and $55 per B in 2021. OPEC and its allies in May implemented a 9.7 million BD production cut accord. The cut tapers to 7.7 million BD from August to December, and then down to 5.8 million BD from 2021 through April 2022. Platts on September 14 assessed international physical sweet crude oil benchmark dated Brent at $38.395 per B and sour crude benchmark cash Dubai at $38.855 per B. Meanwhile, Chris Midgley, global head of analytics, S&P Global Platts, said they were a little less bullish as far as the Brent price was concerned, with Platts Analytics forecasting it to hover around $45 per B at the end of the year. The loss of shale production in the U.S. due to capital expenditure cuts and rigs being taken out should provide some support to the market, particularly as winter demand approaches, Midgley said. Moving into 2021, the market does get a little bit tighter, but there is plenty of pent-up supply, he said, adding that the risk of a fresh wave of COVID-19 infections could pressure demand further amid fairly comfortable supplies. Other factors: it is no longer about shocks in supply and demand, but it is also about the sentiment of the market, the sentiment of the customers and the sentiment of the public that really impacts, Mohd Yusri Mohammed Yusuf, VP Refining and Trading, Downstream, at Petronas said, adding that being agile was the need of the hour. Moving forward, energy transition and environmental awareness will be key themes for the industry, he said.